The big news of the day is the IRS has published updated tax guidance for virtual currency. We'll take a few minutes to unpack what that means for you and take a look at some good news. It's Thursday, October 10th, and this is Exodus Market Daily. Welcome to the program, everybody. It's good to have you here. Well, the IRS has finally updated its guidance for what the heck we're supposed to do regarding taxes on our crypto assets. The last time the IRS published guidance was way back in May of 2014. And of course, the ecosystem has become much more complex since then. The summary here revolves around a few key items. The first is revenue generated from forks. Basically, if you receive an asset from a fork or an airdrop, you automatically assume a tax liability for the value of that asset at the first time it's recorded on a blockchain, and you're able to control those assets and spend them. This is what the IRS calls dominion and control. More about spending in a minute. This does raise the question of the legitimacy of someone else forcibly causing a taxable event on you and the risks this poses for an individual taxpayer from a financial aspect and loss of control of their own tax liabilities. The IRS is also treating all these events as the same, which shows they've not quite grasped why these forks happen and what they mean. It makes sense though, because they don't have to, and they only need a way to calculate a tax liability. Some accountants have viewed this as a positive step because there's now a roadmap to use. However, since any event on the blockchain can be considered a taxable event, if you're an individual with a high number of transactions, untangling your tax liability just became much more difficult. Say goodbye to March. The second item is cost basis clarification. What the cost basis describes is how to calculate the amount you spend to acquire virtual currencies in US dollars. And the basis is increased by certain expenditures and decreased by certain deductions.
What did he just say?
It's also to assess the fair market value of assets received as income, whether from mining or the sale of goods and services at the time you receive it. And then this, which affects many people I know, myself included. For those of us that spend their crypto on, well, anything, that grande soy latte at Starbucks just became less tasty. We will not be exempt from incurring an additional tax liability. That's right. When you spend it, your virtual currency is taxed again, along with the tax you're paying on the goods. This, however, is not a new piece of guidance. It was in the original 2014 publication. Personally, I was hoping the IRS would have made an exemption and considered the assets as currency instead of continuing to treat them as property. So, I'm not a CPA, and of course, I encourage you to do your own research into how this new guidance affects you. We'll include some useful links below in the description and put together another video to bring all of this information to you in a digestible format. Until then, let's do the numbers. So that was a lot to unload at one time, so we're going to take this pretty quickly here and just give a quick overview of what's happening in the markets today. We're going to start with price, since that's the thing that people pay most attention to. Bitcoin raising 3.69. Good news. Jumped last night. So it was nice to see. Up past $8,511. Market cap up about $6 billion from yesterday at $153 billion with a $20 billion 24-hour volume. Price leaders followed by Maker, up 6.82% at $527.50. These update in real time, so you may see some of these numbers changing as we go through it. The Maker has a $528 million market cap with $11.3 million 24-hour volume. Following in third place at $230, down 1.07% with a $4.15 billion market cap and a $1.62 billion 24-hour trading volume. Then followed by Ethereum, Bitcoin SV, Dash, Litecoin, Monero, whoop, the champion, making it back up into the top 10 and holding steady. Now looking by market cap, Bitcoin sits at the top, followed by Ethereum, XRP taking its place at third in the market. Again, it was down earlier in the week to number 5 or 6, which was really surprising to see. Bitcoin Cash, Tether, USD, Litecoin, EOS, Binance Coin, BSV, and Stellar. All right, taking a quick look at the overall 24-hour winners and losers in the market. DGD up 8.15%, Maker up 6.24%, Ravencoin up 6%, MCO a little bit over 6%, Ethereum Classic just under 6%. What we're seeing here, though, is that you don't have to scroll very far down today to start to see some of the alts in the red, which means that people are probably focusing on Bitcoin, moving back into Bitcoin. If you look at the losers, we have some double-digit losers today. Ethos, Lunar, Syndicator, RCN, all in the double digits. So, keep an eye on those market details, see what's happening. The markets change pretty quickly. As in last night, it was nice to see just in a few minutes, Bitcoin jump from just over $8,000 to $8,500. All in all, a positive day in the markets as long as you're not too deep into alts. Thanks for following along. We hope this information is useful to you. So please give a like, share, and subscribe for more daily updates, tips and tricks, and generally better crypto. We would love to hear from you.